Hi everyone, welcome back to the another session of accounts. I am Shiva from Gitanjali Junior College. Today we will be seeing the accounting concepts. That is, on what concepts accounting is working, on what basis the accounts are prepared, what are the base for accounts. So today we are going to see with that. Accounting concepts are really important. See, if a student just want to score marks, pass out the exam, for them this is not necessary. A person, if he really want to learn accounts, if he really want to be an accountant, then each and every concept of the accounting is really important. You should not miss that. Okay, so starting with the accounting concepts. Basically there are 9 concepts which are given in intermediate. The first one is business entity concept. Now business entity concept is telling that owner is different from its business. Owner is different from his business. Now, let us suppose I have started one business with 2 of my friends. That is called as partnership business. Because 2 or more persons, 3 people together doing a business, we have given 50 lakh rupees into the business. So that is our capital, our business, our money. Yes, everything is ours, right? But whenever you are preparing accounts, that everything is not ours. The first concept is business entity concept. The entity concept is telling that owner is different from his business. What happens with this? We can, if we are following this business entity concept, we can segregate the private transactions, that is private money transactions of the owner, and the business transactions. If owner is paying his personal expenses from the business, that can be identified only if we are following this. For example, I am paying my house, that is mere ghar ka electricity bill from the business amount. Will you take that in the business expense? No, you will not take that, because that belongs to my personal expenses. So business expenses are business expenses, owner expenses are owner expenses when you are following business entity concept. Simply owner is different from his business. Whatever the money he is giving it as capital, जो capital वो दे रहा है, so that is treated as a liability for the business. We are taking from the owner, we need to return back to the owner the capital. So the capital what owner is giving, that is also a liability for the business. So that is business entity concept. Next one is dual aspect concept. For the dual aspect concept, double entry system. Double entry system is stating that each and every transaction of the business has 2 aspects. How many aspects? 2 aspects. One is receiving aspect and 2 is giving aspect. Giving and taking. For example, if you are buying a building for the business purpose, or if you are buying anything, if you are buying a machinery for business, what you do? In that there are 2 aspects. One is you are paying the cash, this is giving aspect, and you are receiving the machine. So in accounting we have 2 aspects, receiving aspect and giving aspect. So that is dual aspect concept, is stating that there are two concepts. One is receiving aspect and giving aspect. Both are there. The next one is going concern concept. Except sole trader. Except sole trader. Now who is sole trader? One person who is doing business. Except that form of business, in other form of businesses like joint stock company, partnership, going concern concept is to be followed. Going concern concept is stating that once you are starting your business, that is not going to end on a particular time, because it should run for a long period. A single partner affecting by his health or his income will not affect our business. Let us suppose there are four partners. Out of four partners togetherly they are doing the business. Out of four partners, one partner become insolvent. Business will be running or business will be closed? No, business will be running. Now let us suppose take one joint stock company as an example. Take Reliance Industries as an example. One shareholder has sold his share and the other shareholder has purchased his share. That means, I mean to say that owner has changed. Business remains the same or not? Yes. The going concern concept is stating that people may change. Any one of the members may die, or they become insolvent, they become lunatic, or they become insane. Business will be running. Business will not be closed. Business is closed by legal forms, okay, whenever the business need to be closed, but not by the owner's interferences. Okay. The next one is money measurement concept. Whatever you are recording in the business, all those transactions should be recorded in terms of money only. Okay. Other than money transactions will not be considered in the business. खाली पैसा ही बात करता है अकाउंट्स में. क्या सर खाली पैसे ही? यस, अकाउंट्स का काम ही है. आप पैसा है तो ही हम रिकॉर्ड करते, पैसे नहीं है बाजू हटो. आई विल गिव यू वन एग्जांपल. वी हैव ए मशीनरी इन आवर business organization. That machinery has breakdown. खराब हुआ, मशीन खराब हुआ. Will we record that machine has breakdown? No, we will not record. Not necessary actually. But we will record one thing, the cost incurred to repair that machinery. Because that is in the monetary terms. Machine has breakdown, we will not record that because that's not a machine, that is not a monetary value. We can't express that in monetary value. But for the machine breakdown, we call up with a mechanic or technician, we got up repaired, we paid for that, we will record that. Because we are paying there the money transaction is happening. Okay, money measurement concept is telling that only monetary terms. If there are no monetary terms, we will not record that. So these are the concepts to be followed. Okay, owner is different and business is different. The two aspects should be considered. Going concern, business should run. Whenever you are preparing accounts, you should keep in mind that you will be preparing the accounts for the particular year. Whenever you are starting the accounts, you should not keep in your mind that it might end by 1 month, 2 months, 3 months. No, not like that. For a particular year you need to prepare, because we expect the going concern concept. Money measurement concept, only monetary terms are recorded, the other we won't record anything. Next one is cost concept. For this, to remember this, I always add a word called historical. Historical cost concept, you can remember it very fast. Actually, the cost concept is telling that whenever you are recording any transaction or if you are recording any asset, it should be recorded on its original cost. I'll take two examples. One is land, the other is machine. Now when we have purchased this is 2022. Let us suppose we have purchased this in 2015. Land in 2015 and machine in 2015. Now in the year 2022, what is the price? Let us suppose land was purchased for 10 lakhs, machine was purchased for 2 lakhs. What we need to record now? In 2022, we follow the historical cost concept only. Whatever the price you have purchased, the same price we will write today also. You may tell that, sir, you should land in 2015, you purchased it for 10 lakhs. In 2022, it might be 20-30 lakhs, sir. Why you are writing only 10 lakhs? Because we follow one concept called cost concept. Cost concept is telling that the historical cost, the original cost what you have paid for the acquisition of that asset is to be recorded, not the market value. But one thing, if any depreciation, for machineries we charge depreciation because year by year machine is used and depreciation is charged. The depreciations are charged, but market value is not recorded. Okay, so that is cost concept. Next one is accounting period concept. For any of the business, you need to follow with one particular accounting period. Accounting period can be for 1 day, it can be for 1 month, it can be for 1 quarter, 3 months, it can be for half year, it can be for 1 full year. It is not like that you start preparing the accounts in the year 2015 and you will not end that, you will not make a total of that and you will not ascertain the profit and loss of the business. It is not like that. Whatever you may follow. If you are doing an 1 day exhibition, you need to prepare 1 year accounts? No, 1 day exhibition. Prepare accounts for 1 day and ascertain the profit or loss same day. Exhibition, 1 day, make it that. If it is 1 month exhibition, prepare your accounts for 1 month and ascertain the profit or loss for that particular month. But usually in business, usually in regular business style, we prepare accounts for 1 year. How much of the time? That is 1 year. And here we follow two concepts. One is calendar year and the other is financial year. What is calendar year? Calendar year, when does calendar year start? January it will start, okay, and it will end by December. 1st January, 31st December. Calendar starts and ends. But financial year starts in the month of April, 1st April and ends by March. Okay. So now accounting period concept is telling that you need to follow one particular period of accounting. Usually that is 1 year. There you need to follow one calendar year or financial year, that depends upon the business, kind of business, then we can follow with that. Usually appreciated is financial year, because the income tax department is always asking us to prepare by the March end and pay the taxes by the March end. Okay, so accounting period you need to follow with a particular accounting period. एक बार स्टार्ट करें, लिखते गए 10 साल के बाद हिसाब करेंगे नहीं चलेगा. पर्टिकुलर 1 ईयर के लिए प्रिपेयर करो, हिसाब करो, प्रॉफिट आया लॉस आया, अगर प्रॉफिट आया अच्छा है, अगर लॉस आया you can correct yourself. See, whenever you are preparing the accounts, you will ascertain the result for that. Result can be profit, the result can be a loss. If you are getting loss, then you can correct. Why you are getting loss, you will check into your business where you are doing the mistake and you will correct in the next accounting period. Yes or no? So this is accounting period concept. Next one is accrual concept. Usually when we are doing business in cash, whenever we are receiving the cash, we write it. Whenever we are paying the cash, we record that. But accrual concept is not telling that. Accrual concept is telling that whether you receive cash or you don't receive cash, that is not necessary. You made a sale, you made a credit sale, yes, not received the cash, the sale has occurred and you have rendered the services, you have not received the cash. आप किसी के लिए काम करें, वो पैसे नहीं दिया, कोई बात नहीं. Record that in the same particular year. Don't record that whenever cash is received, because you have done sale in this year, he has given cash in the next year. Sale in this year and receiving cash in next year, can you ascertain the correct profits? No. For that, even if you need to prepare prepaid expenses or outstandings incomes also. If you need to prepare this, prepare. But the thing has occurred now, you record that. Irrespective you have received the cash or not. You made a sale, record that you made a credit sale, and that will give you that will help you in calculating the profit. If you are not taking that the credit sale now, if you are leaving that, if he is paying in the next year, if you are considering it in the next year, then what happens? The profits of this year will go to next year. So to ascertain the correct profits for this year, we need to follow accrual concept. If it is occurring in this financial year, this accounting period, then you need to record that. Next one is matching concept. Matching concept is telling that the revenue and the cost should be matching. Whatever the revenue for that accounting period is there, it should be matched with the cost for that accounting period. Let us suppose, I will give you one example. You purchased goods worth 1 lakh, okay, and you sold 70,000 goods worth 70,000 rupees for 1,20,000, okay, 1.2 lakhs. The remaining 1 lakh you have purchased, 70,000 you sold for 120. The remaining 30,000 rupees goods will be shown in the unsold stock. Will be shown in the unsold stock. And the revenue 1.2, the cost 70,000, that should be matched, not this 1 lakh. If you are subtracting purchases 1 lakh, sales 1.2 lakhs, then your profit will be only 20,000. That's wrong. Your purchases are 1 lakh, your sales are 1.2 lakh. For this, you only sold the worth of 70,000 and the remaining 30,000 is your unsold stock. Okay. This should be seen in this way, not like 1 lakh purchases, sales 1.2, profit 1.2. Then where is the unsold? So that is matching concept. So revenue and cost should always be matched. Next one is realization concept. Realization concept is stating that whenever you are realizing your revenue, whenever your income is being received, then only you should consider it has an income. Don't estimate now sitting in the office and estimate this year we are going to make a profit of 20 lakhs, and don't make it as 20 lakhs profit and announce as 20 lakhs profit. No. Whenever your income is realized, that is whenever it is actually received, then only you should consider it as to be an income. नहीं वो आगे चल के इनकम आएगा, आप क्रेडिट में सेल करें उसमें प्रॉफिट आएगा ना, आगे चल के वो पैसे देने के बाद हमारे को अच्छा प्रॉफिट होगा, वो पैसे देगा क्या, क्वेश्चन मार्क है. सो इसलिए द ओनली रीजन इज once you realize your income revenue, then only record it in the business. Until then you should not record that. So that is the realization concept. So these are the basic accounting concepts which are to be followed while preparing the accounts, and these are only the base for preparing the accounts. Hope students you have understood this concept, and follow with my classes for the next classes, and do share these videos to your friends and relatives who is in intermediate first year, because this is an intermediate first year concept, and all these concepts, all these 9 concepts individually can be asked for 2 marks. 2 marks, 2 marks, 2 marks, or you may sometimes ask one concept for 5 marks also. Okay, so these are the accounting concept. So thank you.